So the prediction kind of came true that, this is kind of what shareholders expected. Now the bidding war begins?
Again, yeah. Yeah. So
the bidding war continues.
Yeah, exactly. 4 business days. So Wednesday, Netflix has still to respond. And it could just raise its offer by $1, and that would sort of put it in the same context of where it was before. Or it may go higher, or they may walk. Again, right now we think Ted Sarandos, the co-CEO of Netflix, is in the White House making the case for his deal still. So all indications are that they still want to participate.
So Paramount commenting too. Did you say this? Forgive me if I missed this. Commenting on the Warner Brothers board's determination, Paramount will cut Warner Brothers' potential $1.5 billion financing costs. Paramount has $57.5 billion debt commitment, from lenders, has commitments from Bank of America, Citi, and Apollo. And that was a sticking point, right, Chris, earlier on. Warner Brothers Discovery was a little concerned about the financing part of Paramount Skydance's bid.
Yeah, this shows how this transaction has evolved from December. It's more than just $1 more a share that Paramount's offering. They've significantly increased they'll backstop. Larry Ellison is personally backstopping all the equity that they're going to put into the deal, plus $40+ billion. He's backstopping some of the debt they're refinancing, some $15 billion worth. They've committed to a much higher termination fee. If they don't get regulatory approval, they would pay $7 billion, and they agreed to pay $2.8 billion to Warner Brothers, which would then send it to Netflix to get them out of the Netflix deal. So a staggeringly large amount of money that Paramount's committing here.
So ball's in Netflix's court at this point. What do analysts think it comes back with?
I think momentum has been lately moving against Netflix and into Paramount, that they're the ultimate winner. I've certainly heard that from a lot of people.
Wait, sorry, who's the ultimate winner?
Paramount.
Paramount is the ultimate winner, yeah. So
that changed quickly, Chris.
It has, yeah, it definitely has. They've been very aggressive. They played every single card they can think of, from the lobbying to the proxy fight to the changing the terms. They've really worked everything.
I'm just looking at what Netflix stock is doing after hours. Again, this was expected, but after hours Netflix stock is up 0.7%. And just a reminder of where it closed today, up 2.3% today, up 6% yesterday, and on Tuesday, up 2.7%. Investors like the idea of the company not spending all this money and going into debt.
$2.8 billion. They could make a lot more movies and TV shows. And that's what they're doing.
Hey, what does this mean for Hollywood?
That's a funny thing, because Paramount has sort of made the case that they're a better buyer of this asset, largely because of Netflix's historical opposition to putting movies in movie theaters. But this is still the consolidation of 2 of the 5 biggest movie studios, consolidation of 2 of the biggest operators of cable TV channels, 2 big streaming services. There's going to be a lot of job cuts. Paramount's CEO, David Ellison, is trying to make the case that he's going to increase movie production in particular. But that remains to be seen. This is definitely more turmoil in the short run for Hollywood.
Hey, just to wrap up, Chris, here. So 4 days. So wait. Does now Netflix have until Sunday, or when?
Business days, so Wednesday.
Wednesday. Yeah. All right.
But the lawyers will be working over the weekend, Carol. Don't worry.
Probably.
All right.